In this video, we're going to discuss the main difference between technical trading and fundamental trading. So technical trading is purely based on chart analysis. The reason for this is because charts are viewed as graphical representation of human behavior. So by simply looking at one of your charts, you are able to see how the world reacts at various times of the day. Now, in terms of strategies employed in this trading style, you only need to concern yourself with chart patterns, otherwise known as setups. Now, we're going to record many videos about chart patterns or setups, and we're also going to teach you how to identify them, trade them, and when to exit. But in terms of example, what we've got here is a simple technical trade. So in this area here, we have a consolidation, which is defined by the top trend line and the bottom trend line. They make a sort of a wedge or a triangle pattern, but the trade that we're looking for is a break of this bottom trend line here in the downwards direction, and that's exactly what's happened there. Now, please don't trade this if you spot this at this stage, because there is a lot more that we need to teach you in terms of trading this pattern. This is purely for example purposes. Now, fundamental trading is slightly different. It is purely based on news or data. It is not concerned with any chart patterns or anything like that. In fact, a lot of fundamental traders don't even look at charts. They simply wait for news or data to be released on a daily, weekly or monthly basis. Now, in terms of the type of data that we're looking for example, on a monthly basis, we're looking for the non-farm payroll numbers from the United States, which is the biggest monthly number. Now, even if you're a technical trader, you should stay away at the time that this data comes out, because it has the power to shoot drastically up or down. Now, on a more weekly basis, we're looking for data such as the US unemployment numbers, which is released from the US on a weekly basis. So these numbers obviously can make the charts go up or down. So if you're a technical trader and you are in a very small time frame, you should also stay away from trading these numbers. But if you're trading in time frames 4 hours or above, then you should be fine to stay in that trade. So in terms of example, what we've got here is a 1 minute chart. Now, the reason why I've circled it is because this is quite a high drop down. That's quite a big black candle in the market, and in a 1 minute chart, that's quite rarely seen. So this means that some news has been released at this point. It stopped the current uptrend going up, and it's reversed back down very, very sharply. Okay, so this is an example of a fundamental trade when news has came out of either the US or some other country. So for now, that's all you need to know in terms of our examples, and we shall see you for the next video. Thanks.